Hello everyone. Today, we are going to take a deep journey into the mind and trading secrets of Tom DeMark, the most mysterious, most debated, and indispensable name on professional trading desks. If you feel that the indicators on your screen are constantly misleading you, or that the price stubbornly continues to rise every time you sell on an overbought signal, what you learn today could radically change your perspective on the market. DeMark offers us more than just an indicator. He provides a vision for reading the market's biological clock. Now let's begin examining that fine line where classical analysis stalls and market timing begins, from its most basic foundations to its most complex details, without any headings or interruptions. There is a famous saying etched into the ears of everyone who has spent years in the financial markets. The trend is your friend. At first glance, this sentence seems very logical and often even makes money. However, experienced traders know that, like any friend, the trend can leave you stranded at your most unexpected and vulnerable moment. This is exactly where Tom DeMark enters the stage. He is not a crowd follower blindly chasing a trend. He is a timing master trying to measure when the trend will get tired and when it will run out of breath. DeMark's approach to technical analysis represents a fundamental objection to most of the classic indicators we use today. While oscillators like RSI, MACD, or stochastics tell you where the price is going, DeMark has always focused on this question. Is this movement still sustainable, or is its time running out? This question is the fundamental difference that separates him from an ordinary technical analyst and transforms him into a market strategist. For DeMark, the issue is not direction. It is mathematical and psychological timing. DeMark's starting point is revolutionary in the world of technical analysis. The market is unpredictable, but it is timable. Most traders spend their lives looking for the answer to the question, where will the price go? Yet, Tom DeMark was never interested in the final target the price would reach. His main concern was whether the probability of the current movement continuing was still statistically high. Classical technical analysis seeks direction. DeMark measures endurance. While classics ask, has the trend started? DeMark pursues the question, how much longer can the trend withstand the pressure? This is why he was never a trend follower. He entered the literature as a specialist in trend exhaustion. According to him, being in a trend is no great feat. The real skill is understanding when that trend has turned into irrational exuberance or illogical fear and getting off the ship in time. The greatest secret of this system is the discovery that time is as important as price, and sometimes even more so. Before DeMark, most indicators in the market focused on only two things, where the price went and how fast it got there. DeMark added critical new dimensions to this limited equation. How long has the price been moving in the same direction? How many times has the same behavioral pattern repeated consecutively? Is the market still behaving normally, or is it struggling like a vehicle with an overheating engine? Because of this perspective, DeMark indicators differ from conventional momentum measures. They do not predict volatility or follow trends. They directly measure the market's patience and psychological limits. Think of a marathon runner. DeMark doesn't look at how fast the runner is going, but at how many kilometers they have run without taking a breath and when the trembling in their legs began. The numbers 9 and 13, which are the most well-known and perhaps the most misused in the market, are not magic wands but behavioral filters. This is the most misunderstood point. DeMark never said, buy immediately when you count 9, sell immediately when you count 13. These numbers represent how consistently and uninterruptedly the market is behaving in the same direction. It is a behavioral counter showing whether the market's stability or its stress is increasing. DeMark specifically emphasizes this. A signal is read by looking at the context, not the number. If a trend makes the same relative closes without deviation for 9 candles, this is not a sign of strength, but the beginning of an exhaustion signal. In other words, this is not a math game, but a map showing when the crowds will get tired. At this point, the trader's duty is not just to count the numbers, but to analyze under what market conditions those numbers occurred. The sharpest difference that separates DeMark's system from the thousands of strategies you see on the internet is that he does not accept any signal without a cancellation level. The most common mistake in classical technical analysis is to enter a trade excitedly when a signal arrives and think about the stop point later. When a trade goes wrong, most analysts make excuses saying the market was wrong. DeMark rejects this from the start. According to his approach, If you haven't determined exactly where you are wrong with a precise mathematical line, the signal where you are right has no value. This is why TDST levels, risk lines, and invalidation levels are not visual ornaments in the DeMark system. They are its heart. This approach makes him not just an analyst, but also a risk management genius. DeMark systems tell you, above all else, where you will be wrong and where you need to withdraw from the market. Many amateur traders complain that signals come too early when using DeMark's systems. In reality, this is not a mistake but a conscious design choice. DeMark's goal was never to catch the exact top or the exact bottom and be a hero. His goal is to report that the risk-reward balance is now skewed and that the cost of staying in the current direction has become higher than the probability of winning. This is not a trade order, it is a vital position warning. As you approach the edge of a cliff, DeMark tells you to stop 10 meters before falling off. Most traders see this early warning as an error because they want to go to the very last inch. However, professional fund managers and institutional trading desks prefer DeMark precisely because of this margin of safety. So, why is DeMark used so widely on institutional desks while individual investors struggle with it so much? Because DeMark requires patience, filters, and above all, context reading. The individual trader usually wants to catch a trade in every candle, see constant action on the screen, and get rich with a clear buy-sell arrow. DeMark is the complete opposite of this trade-at-every-moment logic. The institutional trader carries a position, reduces risk gradually, and plans exit times days in advance. For the institutional world, DeMark is a navigation system used while managing massive positions rather than just a signal generator. While big players are unloading their goods on that 13th candle where the market finds the very last buyer with euphoria, individual traders usually get caught up in that euphoria and buy at the very top. DeMark ensures you do not fall into this trap. Tests conducted on DeMark indicators in academic circles can sometimes yield mixed results. However, the biggest mistake in these studies is testing these indicators as if they were just mechanical robots. DeMark never said, "My system is an ATM that prints money on its own." He argued this: "I will tell you when the market shows an anomaly. The rest is up to your market knowledge." For a real trader, what academic tests say is often irrelevant because DeMark is not a strategy, but a decision support mechanism. A surgeon's scalpel cannot perform surgery on its own, but in the right hands, it saves lives. DeMark indicators are exactly like that. The real trading secret behind all these complex systems, numbers, and lines is actually based on a very fundamental truth. The market is made of people and people get tired. Algorithms may change, transaction speeds may drop to microseconds, and new financial instruments may be invented. However, the building blocks of human psychology, greed, fear, persistence, and stubbornness have not changed for thousands of years. DeMark doesn't measure the price itself, but this unchanging psychological fatigue and exhaustion. This is why his systems worked in the low-volume paper markets of the 1970s. They worked in the internet bubble of the 2000s, and they still continue to work today in crypto markets where thousands of transactions happen per second. Because no matter what the price of an asset is, the emotional capacity and fatigue threshold of those buying and selling it are the same. If you have a patient nature, can set aside the ego of constantly needing to be right to focus only on standing in the right place, and have made risk management a way of life, DeMark's world will open new horizons for you. However, for those who want to make dozens of trades every day, follow signals without thinking, or have an impatient nature, these systems will remain nothing more than a confusing mess. The DeMark trader is like a hunter waiting for prey. They wait for that moment of exhaustion when the market is at its weakest and everyone is most hyped, and then they make their move. In conclusion, we must not forget this. Tom DeMark does not try to predict the market. He whispers to you that critical breaking point where the market is now struggling too much to be predicted. Hearing this whisper is the first step toward escaping the noise and the emotional turmoil of the crowds in the market. When you start looking not just at direction in your own analyses, but also at the biological clock and fatigue of the market, you will be one step closer to true professionalism. When you begin to use technical analysis, not as a fortune-telling tool, but as an art of probability and risk management, DeMark's legacy will be your most powerful guide. Today, we touched upon Tom DeMark's revolutionary strategies and that deep perspective on technical analysis. I hope this information opens a brand new and profitable door in your trading journey. Never neglect patience, timing, and discipline in your analyses. Remember, the ones who earn the most in the market are not those who know the most, but those with the best timing. I wish you great profits and excellent analyses where you always stay on the right side.
Thank you for watching our video. In the next episode, we will examine the journey of another legendary trader. Don't forget to subscribe and turn on notifications. For more content and strategies, you can join our Telegram channel. The link is in the description.